Do you think the next crypto ETF is a no-brainer? Well, I thought so too until a single tweet flipped my entire thesis on its head. Stick around because this rabbit hole ends with XRP, Cardano, and a near billion-dollar fund that might just blindside Wall Street. Okay. Quick kind of rapid fire reality check before we dive in, and this might just shock you, but I am not a financial advisor and nothing in this video is financial advice. Cryptocurrencies are highly volatile and you could lose all the money that you invest. You should always do your own research and consult a qualified professional. Your investments are entirely your responsibility and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses, and today's video is for entertainment and educational purposes only. Now picture this, it's 2 AM, I'm hunched over my desk, cold coffee in hand, doom scrolling crypto Twitter like my next breath depends on it. Everyone and their pet is chanting Solana ETF July approval, easy 99x. It kind of feels like the same echo chamber that we had right before the Bitcoin spot ETFs launched, right? But then you had Nate, the guy who basically eats ETF filings for breakfast. He drops a bit of a curveball. He says, "Hold up, fam. Odds are that the SEC green lights a Grayscale basket fund with XRP and Cardano before it rubber stamps a pure Solana ETF." And you can cue the record scratch in my brain. Okay, so let me tell you why that single sentence made me claw for more caffeine, right? For months, the crypto narrative has been a kind of one-trick pony. Bitcoin ETF done, Ethereum ETF done, Solana next, the end. Right? It's simple, it's linear, it's cozy. But Nate's tweet shatters that neat little timeline because it puts a $800 million beast called the Grayscale Digital Large Cap Fund, ticker GDLC, front and center. Now, if you've ever, at least if you've never heard of GDLC, you need to brace yourself because you need to imagine a mixtape of blue chip cryptos, right? 78.77% Bitcoin for the OG baseline. You've got 12.4%, Ethereum for the melody. Then, the kind of surprise vocals. 4.86% XRP, 3.04% Solana, and you got to sprinkle in a nice little cheeky 0.93% Cardano harmonizing in the back. Now it's basically the Spotify top hits playlist of digital assets, lovingly curated since 2018. And yes, I said XRP, the same token that the SEC wrestled with for nearly a decade, and it's sitting in this mix like it owns the stage. But here is the kicker. Back in April, Grayscale filed an S3 to morph GDLC into a fully fledged ETF. So let's think of it like getting a kind of souped up engine swap, right? Suddenly the fund could trade on major exchanges instead of the gray market. And if you're kind of wondering why that matters, remember how every kind of retired uncle, started asking about Bitcoin the moment that spot ETFs went live in 2024, right? Liquidity plus simplicity equals tidal wave adoption. And so while the world is kind of frothing over standalone Solana ETF, Nate believes that the SEC might take the safer route, approve the basket first, then use it as kind of the president to shepherd a single asset altcoin ETFs in. Now, the analogy here that he uses is actually quite brilliant. So when toddlers, refuse to eat broccoli, you hide it in their mac and cheese. Now, the regulator kind of gets to say, see, it's diversified, it's lower risk, we're protecting investors, all while quietly letting XRP sneak past the gate. So let me pause here and confess that I nearly dismissed Nate's hot takes on Twitter, kind of as just noise. But I'm a kind of data nerd here, right? And I started kind of poking around the historical precedents, and guess what? In December, the SEC already greenlit a mixed asset fund from Hashdex and Frankel Templeton, so Bitcoin plus Ethereum. Right, so the door to index-style crypto funds it's already cracked open, right? And GDLC would just merely swing it open wider. And here is where the plot truly thickens. Bloomberg ETF gurus, that's Eric and James, yep, the same duo that nailed the Ethereum ETF timelines, ran probability models on upcoming proposals. They give Solana and Litecoin ETFs a 90% chance. Sure, but they also kind of slide XRP ETFs in at 85%. So that means that if you're kind of betting on a horse race, XRP isn't limping in the back. It's actually practically neck and neck with Solana. And yet the mainstream chatter ignores that nuance, right? Everyone wants a single ticker headline. Solana shoots to the moon, it sells clicks, but a basket ETF? That sounds boring, right? And that, my friend, is precisely why it could actually become the ninja entrance for altcoins into mainstream portfolios. So institutional investors, they live for diversified exposures, right? They can pitch it to risk committees with, fewer kind of gray hairs sprouting. Okay, so let me bring into this conversation my personal chaos then. After kind of Nate's tweet, I opened up about 20 different browser tabs, SEC filings, fund fact sheets, on-chain analytics, and, well, if I did have a poorer computer, my CPU fan would have been screaming like a banshee at that point. I found, that the GDLC's assets under management are flirting with around $800 million. And in the last month, its share price popped 14%, with an 11% year to date. Now that's before any ETF conversion hype. Imagine what would happen if Robinhood mum and dads can slap it into their retirement accounts with just 2 clicks. But here is a relatable problem, and it's called analysis paralysis. Right? We've all been there, right? Through a roller coaster of hype with Bitcoin and Ethereum approvals, but your newsfeed is now cluttered with copy-paste thumbnails screaming 100x soon, and it's truly exhausting. And it kind of muddies genuine signals with kind of FOMO noise. And I felt that in my bones when I caught myself hovering over the next kind of market buy button at 3 a.m. And it's kind of when I knew I needed a sanity checkpoint. Enter our free educational Discord server. Yep, the link is chilling right there in the description. It's basically my kind of virtual coffee shop where we kind of break stories like this into real bite-sized facts, chew on them together, and we can call out each other's kind of blind spots, if you will. Now, if you're kind of tired of algorithm-fed hot takes, why don't you just come and say hi? Right, we've got the meme channels. We've got, someone who's going to be, slapping, Nate's face on, some kind of, I guess, a meme with some interesting man template. And, you can stay around for the laughs, or you can just learn from everyone else who's there. There's no paywall. You can hang out in the general chat completely for free. Now, stats time, because spreadsheets never lie, right? Now, according to Grayscale's June 11 holdings report, GDLC's Bitcoin allocation stands at 50,521 BTC. Ethereum, it comes in at 375,961 ETH, and XRP stash is shy of 250 million tokens, around 242 million XRP, worth roughly $120 million at the current prices. Then we've kind of got 1.2 million Solana and 55 million ADA tagging along. Now that mix alone already kind of dwarfs some niche hedge funds. You add the ETF wrapper and voila, an on-ramp for pension funds that previously needed 10 compliance sign-offs just to touch a hardware wallet. But wait, why would the SEC bless XRP after hounding Ripple Labs for almost a decade? It's a great question, right? The kind of partial court win that Ripple scored last July, clarified that programmatic sales are not securities. Now, couple that with the way that GDLC existing shares have traded for years without destroying retail, and suddenly the SEC can justify, look, It's already in the wild. We're just adding more transparency. It's kind of like the regulator would be face-saving at its finest. And here's another angle, deadlines, right? The SEC must rule on basket funds by July, whereas its drop-dead date for standalone altcoin ETFs stretches all the way out to October. So bureaucracy 101, you deal with the kind of earlier homework first. So Nate's timeline prediction, it isn't just a hot take after all. It's actually literally baked into the Federal Register. If chairs, if the SEC chair wants to staff, back at the kind of beach by August, approving GDLC is the path of, well, least resistance. Now, I promise some personal anecdotes as I always do, so buckle up for my favorite. Remember January when Bitcoin ETFs approval day kind of turned into a live stream city? I had 3 monitors going. One was playing CNBC, another charting BTC second by second candles. Yes, that's a thing on TradingView. And the kind of third was the Twitter memes, right? Well, my dad calls me midstream. He's the guy, by the way, who asks if Dogecoin could be mined on a lawnmower. And he goes, "Son, where can I buy this Bitfront thing that you all keep talking about?" And if the ETF wrapper can truly lure my dad, well, you can unironically kind of print emails, or who currently unironically prints emails. You need to imagine the tidal wave when he sees a single ticker holding Bitcoin, Ethereum, and that Ripple coin that you mentioned. That kind of, folks, is the adoption cliff that we're actually standing over here. Of course, there's a climax. Now, the day after Nate's tweet, GDLC's discount to NAV, it still trades at a slight discount, it narrowed by nearly 2 percentage points in a single session. Now, that's like Wall Street's silent nod that something might be cooking. Remember, these big funds, they move like oil tankers, not jet skis. A 2% swing in premium or discount is practically a cannonball splash. But let's zoom out. Why should retail investors, aka you and me, and maybe even my lawn mowing mining dad, care about a multi-asset ETF? And it's really just 2 words. Domino effect. Now, if the SEC allows XRP exposure under the umbrella of a large cap fund, how can it then turn around and choke off a pure XRP ETF proposal? Right? Precedent is a powerful beast. It's kind of like opening Pandora's box, but with blue chip altcoins instead of, ancient curses. And yet, here is the challenge, staying grounded, right? Every boom cycle, new entrants waltz in convinced that they found the fast pass to generational level wealth. They'll hear basket fund and think ETF equals automatic moonshot, forgetting that diversification does not delete risk. It just slices it into prettier pieces. So I learned that the hard way back in 2018 when I YOLO'd into a top 10 index token that quietly rode down 80% while I blinked. And the basket was diversified. My FOMO was not. So what's the sensible path? Well, first, you've got to keep tabs on the filings. They are public after all. Bookmark the SEC's, EDGAR database. Scroll once a week, preferably when you're not half asleep. Second, check on the on-chain data, wallet activity, developer commits, network fees, fundamental signals that still matter even when the headlines scream ETFs go brr, right? Third, of course, and yes, shameless plug, use tools that don't break the bank. The Bluefin crypto exchange is linked down below. It offers deep liquidity spot pairs for everything in the GDLC's basket. And yes, that's an affiliate link that supports the channel. It helps me upgrade my cold coffee to hot coffee. And if you already have a trading strategy, Bluefin's advanced order types can help you avoid those emotional market kind of buy clicks at 3 a.m. And by the way, speaking of emotion, let's jog through the possible outcomes so that you're kind of still nerved. Scenario A, the SEC, it rubber stamps GDLC before July. Altcoins rally, Twitter melts as it does always. YouTube thumbnails, they blast into kind of flames, temporarily, of course. Scenario B, you got the SEC that drags its feet. It punts things to October and kind of hash rate dips while macro fudders kind of scream recession and prices kind of chop sideways. People get bored. Conviction is tested. Scenario C, right? SEC says no, highly unlikely, but hey, regulators are going to regulate. So if they, if they do that, and if that happens, the market kind of retests expectations and kind of we rinse and repeat the waiting game for single asset approvals. Regardless of all of that, you got to remember that the markets tend to kind of front run good news. So by the time that mainstream journalists learn how to pronounce Cardano, and yes, I often say it wrong, it's kind of a running joke at this point, smart money, may actually have moved on. So if you're in this game for more than just the dopamine hits, you got to focus on the cost basis, dollar cost averaging, and yes, the boring risk management too. Now I know, right? Telling a crypto crowd to manage risk is like handing out kind of broccoli at a candy convention. But broccoli kept Popeye's heart healthy, right? Even if the cartoon never really showed it. Now, let's tie all of this up in a nice little bow, right? Nate's single tweet kind of cracked my mental timelines a little bit here because it forced me to consider an ETF approval sequence that I'd had actually ignored, right? Fixed assets first, mixed assets first, single assets later. It kind of reminded me to zoom out a little bit here. Look at the precedents, look at the deadlines, and look at the politics to kind of face saving regulators. It kind of also nudged me to lean on the community a bit more, right? Remember that no matter, how many tabs I have open, I'll always miss something that someone else does catch. That is why the Discord crew is absolute gold, right? When a filing drops at 2 a.m., there's always a night out analyst kind of posting screenshots before my coffee pot's even warmed up. And if you take nothing else from this ramble today, take this, right? In crypto, narratives are going to shift faster than YouTube can transcode a 4K upload. You got to cling to a single storyline, or at least if you do, you cling to a single storyline, you're going to get blindsided, right? You got to stay curious, you got to stay skeptical, and you got to treat every bold prediction, mine included, like a starting point and not gospel. Okay, so time for a deep breath. We've kind of trekked through ETFs, the SEC calendars, the fund breakdowns, even dad jokes and caffeine-induced paranoia. What's the takeaway then, right? The Grayscale digital large cap fund might just be the Trojan horse. If it rolls through the regulatory gates first, XRP and Cardano ride shotgun, and the next altcoin wave could look nothing like the last. But if it stalls, so be it. It's just means more time to research, to strategize, and to meme responsibly. Okay, so quick recap before I let you all escape. Follow the filings, diversify your due diligence, hop into the free educational Discord server for unfiltered debates, and if you need a solid trading venue, check out the Blowfin via the affiliate link in the description. Your clicks keep the lights on, literally.